Hi everyone, this is Bag of Dawn, Stock Market Caddy. It's April 22nd at about 8:15 Tuesday evening, and we're coming off pretty two boring days here, Monday and Tuesday after the long weekend. Volatility very low, and the action therefore very low. We look forward to pick up here the next day or two, and we'll get going. But I want to do something a little different tonight. I want to offer to our followers something that we do for our subscribers all the time, and that is to do a little teaching. At our website, for those people that subscribe to us, and certainly those that go to the Caddy School, we can't guarantee anyone that they're going to make money. Anyone that says that they can do that, would be disingenuous. We don't make those types of claims. But what we do try to warranty, if you will, is that we will teach you something, try to teach you something that you didn't know. And from that standpoint, we think our subscription service and certainly the Caddy School, you look at the markets in a way that you've never looked at them before. There are a lot of different ways to trade, impossible to encapsulate in these little 1 or 2 minute videos, but we'll share some things and to give you an idea that of what we do. Now you see our radar day in and day out, and some of these concepts are built into the radar, some aren't. For instance, a lot of the point and figure stuff. But I want to show you something. This is a standard candle chart on the S&P on a daily chart, and you could use any time frame that you want. Now, I'm not that crazy necessarily. There's 1 or 2 candle formations that we're interested in, but I don't want to talk to you about candles. There's plenty of books that are written about candles and interpreting candles. Might be a little bit overdone. But overlaying this is John Bollinger's Bollinger Bands. And there's a lot written about the Bollinger Bands, and so hopefully I don't bastardize them, but I'm going to share with you how we view the bands and how we use them a lot of times, not just on the SPYs, but on almost any instrument. The way that we look at this is as if these Bollinger Bands are our golf fairway. This is our fairway. And 90% of the time, the ball is in the fairway. And that's what we want to do. We want to play from one side of the fairway to the other and always trying to advance. That's one thing. Easier said than done, but I'm going to show you some tips. The other thing that we're looking for is when the fairway narrows. When the fairway narrows, generally, so you can see here we got a nice wide fairway, then all of a sudden the fairway narrows, and then generally the fairway will widen. Fairway narrows in here, you can see kind of pinch in, and then boom. Okay, fairway narrows, price explodes. Fairway narrows, price drops. When the fairway narrows, you're generally going to get a move of some kind, rather significant. It doesn't tell you the direction, but we're going to give you some hints. Now, what we look for in this fairway comparison is, and another comparison too, you might, if you like to do any fly fishing, we like to do it. We also think of these Bollinger Bands as a river. And when you go fly fishing, if you're coming into a river and there are other fly fishers nearby, they'll get pretty annoyed if you go splashing into the middle of the river and you're splashing all over the place. They'll get really ticked off. Okay, plus you're not going to catch any fish. When you come into the river, when you're fly fishing, you want to come in from one bank or the other bank, and you want to ease in, quiet like, so you don't scare away all the trout, and then fish the river. And then when you get out of the river, same thing. You want to get out on a bank, and you just want to ease on out. So whether you draw the comparison to the Bollinger Bands as a river or as a golf fairway, Use whatever metaphor you want. What you want to be looking for, and we have systems, computerized systems that we have written that look for these parameters. We don't want to enter a trade when price is in the middle of the fairway or in the middle of the river. What we're interested in, and we're going to just pick this one because it's in view. We're looking for when price gets outside the bank. So here is a close outside the fairway. It's out of bounds, so to speak. And then we're looking for price now to close underneath this. And she doesn't, but she goes up again. She closes out again. And then look what happens here. She makes a higher high. We're outside the fairway, and then she's coming down right here and taking out this low. This would be an entry for short right here. Why do we take that? The reason is that we have no idea for sure where it's going, but we know where our stop is, which is right up here. Right up here. Anything above that price would be our stop. So we go short and we ride. We ride it all the way to the other side, and then now we're on guard. We're outside this Bollinger Band. You know, folks, that's a good trade, okay? If you're able to go from one side of the fairway to the other side and make a good dollar, you know something? Take your bread. Take your bread. Now we're closed outside here. What do we want to see happen? We would like to see price get above this high. It does right here. Go long and ride it to the other side of the fairway. She's out here. Now, you've got one good trade. Here's two good trades. Now, the sell signal would generate if we close underneath this low, but you can see here, we don't. We continue to ride. But if you wanted to take your bread from this long, take your bread. Take your bread. Now, some people will probably go in here and short this. See, we don't play in here. We don't play in the middle of the fairway. We only play on the bank, on the edge. And as it turned out, it reversed and it runs up. Now, here's a close outside. She closes outside again. She closes outside again. But look what she does. She comes down here and she's underneath. We go short, trying to get to the other side. Doesn't work out. She reverses back up, takes out this high. We close. We're done. That's it. And there's no more trades for us to be had utilizing this type of system. And then we run down here. We close outside. Here's a close up. Could have got stopped out. Here was a close underneath, and then, well, she closed, or not a close, she traded underneath and then reversed up. This could have been an entry in and of itself and ride it up to the other side. What you want to do on these Bollinger Bands, and I'm running out of time, is you want to see, now I want to bring your eye to this area here. We close underneath, but we don't close higher here, so you stay out of the way. And you just let it run down. She's closing underneath, but not above the high. Closing outside. Potentially could have tried in here, but your stop is right here. You would have got stopped out. She closes down again and outside, and then closes up, and then right here would have been a decent little entry. Off of this rejection of lower price, you buy in here, and look. Ride yourself all the way up. Touches this thing here. You want to take your bread like these people did? That's just fine. Take your bread. If you look up here, this was really interesting. She went up here once, twice, got outside, rejected the price, got underneath, get short. Down you come. You could have taken your bread here. Looks like that's what those people did. Came on down, got outside. Take your bread. But if you didn't want to take your bread and you weren't already short, you're out here, you close above, get long here, and you're riding up. About that simple, about that hard. I'm running out of time. There's another little thing that you can do here. So you explain the pinch and playing from the margins. You're playing from the bank of the river, from the edge of the fairway. You're looking for closes outside, but then you're looking for within 2-3 candles. You want to see the high get taken out, or you want to see the low get taken out. You got to be careful. Just because she closes outside doesn't mean you get long. That high has got to be taken out, otherwise she's going to continue to run down. And don't be greedy. If you started up here and you run down here and you want to take your money, take your money. I don't know if price is going to go down there. It might, but it will oscillate. Again, you'll have ample opportunity. You want to be able to repeat this over and over again. The other thing is the mid-band. The only thing we use the mid-band for is to get an idea and confirm the direction. If you look here, do you see how if I was able to draw from this point to this point, I got an inverted cup? That confirms the direction is down. Here is a cup right here. So I'm already in this trade from down here. It's moving up. I'm in the right direction. If you're tempted to get involved in it and you don't see a cup, you might want to just stay out of it. But here is the makings of a cup, and right in here, the steeper the cup or the deeper the cup, the more significant the move. Here was so here you get long here. You don't really have the cup yet, but as you come up this side, the cup forms pretty steeply, and you got a real significant move. Notice here this action here off of the high, off of the high. This has us a little bit concerned. See what's happening here? This cup here down, it was a shallow move down. It was relatively shallow. That's a shallow cup. Here, this is kind of a weak, hasn't really formed much. You have to really run off to steepen that cup. If it fails, so got to use your imagination a little bit. Think of those Bollinger Bands as a golfing fairway. Think of it as a river. Think about playing from one side of the fairway to the other side of the fairway, getting your back up against the wall so that what can you control? Your risk, what it is you're going to lose. And if you don't think you can make it to the other side of the bank, then don't put the trade on. Don't put a trade on up here trying to get to here. She's likely to, to release a lot of information up here, and it might be a failure. So maybe you wait for it to get up here, fail, and then play it down to the other side. That's the sort of thing, folks, that we teach. Feel free to follow us. Feel free to subscribe. We've got a lot of other things. Probably the best value on our website is our Point and Figure DVD set. Feel free to check it out. Sorry for being so long-winded. I hope that helps. Oh, one other thing. When you're looking for the direction, don't look at the top band. Okay, if you're running up to the top band, you want to look at the bottom band. When the bottom band gives a break, you're probably getting a move down. Vice versa. When you are down here, you don't want to be watching this band, you want to watch this band. When this upper band, the opposite band, makes a bit of a push up, you're probably heading up. When the bottom band gives a push down, when the price is up here, everyone's focused up here, you want to focus down here. Good luck, good trading. Be careful, and I hope that helped.